Jerome Powell was caught off guard at the recent press conference, and quite frankly, they're running out of excuses and time. You came here for the truth, so let me unveil that for you. Today was all about Fed speak. Double Fed speak, that is. You know, they say one thing, 2 minutes later they contradict themselves. It's not just Jerome Powell, of course, but he is the face of the Fed right now. So obviously, we got to cover that today. First thing we're going to look at is the Fed changes. What has happened, what you need to know. I'll give you a full breakdown really simply. The second thing, the repos. Repos are huge. I'll get into why that's important and everything surrounding that. And then number 3, what's next? What it means for you as an individual. Let's go. So the Federal Reserve had their statement, had the press conference, as I'm sure you are aware. And then you had a real difference in the markets because, as you see right here, Dow edges lower after the Fed statement. However, the NASDAQ was up. If I look at this screen over here, the NASDAQ was up 100 points, whereas the Dow Jones was down 127 points, just to give you an idea of what's been happening. Now, as always, the Fed repos coming out, the reverse repo operations in this case here. This is the maturity date of July 29th, $965 billion. Let's see what happens. Can we get it to $1 trillion? I'm ready to celebrate. And now you can see right here that there has been this double speak by the Federal Reserve. The guy was stuttering. The guy was all over the place, not during the reading the prepared statements, of course, but when he was being asked a question. It was truly nonsense to see how they were trying to convince everybody that everything's okay, yet we need to keep doing this stuff because everything's not okay. It is just unbelievable to try and watch somebody lie live on the camera, blinking their eyes 100 times, scratching their face, talking like an ape or something. I mean, it's ridiculous. And you got to remember why I say these things. It's because these groups are trying to continue this for a much longer period of time than is necessary to extract the most wealth from you. Always keep your eye on that. I suspect many may agree that this was one of the most confusing Fed press conferences. Where they may be disagreement is why, particularly the balance between the genuine economic uncertainties and what behavioral scientists call active inertia to deeply wired convictions. Good points. Now you can see the actual Fed statement directly from the federalreserve.gov website. Look at it right here. They tell you the economy, it's fantastic. Yes, inflation has risen, but it's transitory. Okay? You continue. They're looking at what happens with the conditions that we've seen since 2020. This issue is front and center for them, and they're not going to touch anything until that's long gone. You know, they talk about how they have to average out inflation. What does that mean? Well, you had really, really low inflation for a long time, and now there's really high inflation, so that can persist for a long time because inflation was really low for a long time. So you balance that out, and we're all good. It's all even. Except for the fact that they were using fake inflation rates before and fake inflation rates now, and these things don't really count the way that they say they do. Now you can see what has happened in the previous Fed meetings and the results in the S&P 500 after. This is what you need to know. If you're an investor, if you're just interested, let's see if the same patterns occur. So you're looking at the Fed meetings, FOMC days, these orange lines that go across the screen coming from the beginning of 2021 up until today. And it is very clear that the market ultimately, initially will come down. However, it will rocket up higher. And by the time we get to the next Fed meeting, we are higher than where we were previously. Anything could happen, anything could change. But this is the way it's been through 2021. Now, is it because of the Fed meeting? No, but it does create a lot of uncertainty. it always kind of destabilizes things just temporarily, even though the Federal Reserve is extremely dovish, even though they suggest to everybody everything's going to be okay. There's always this notion, and a very short period of time, of course, where things are kind of iffy. Let's talk about more in the Money GPS Insights. Number one, historically, uncertainty surrounds these Fed meetings. Number two, once the market stabilizes, the market generally moves higher because this is a risk-on mentality. Once this has been established after a few days of this iffiness, of this uncertainty, then it goes higher. And number three, with this complete disregard of inflation, you can expect more of it. And what does that mean to you? It means that your food prices, energy prices, housing prices, everything you buy is going to increase in price. That also could translate into asset prices as well. Which assets we're going to see the most of this? Well, generally, it's those which are a hedge against inflation. But at this point, nobody really knows because the currency is being devalued so rapidly. One new thing that came out of the Fed's meeting was this. Fed launches standing repo facility to boost market liquidity. This was expected. In fact, we were expecting this last year, and now here they are. The Federal Reserve made this public that they were thinking about it, talking about it. Is this going to happen? There's a lot in the Wall Street Journal article. I'll read you some bits of it. The Fed is putting a $500 billion cap on the facility and is offering a similar tool to foreign central banks. The Federal Reserve is launching new facilities designed to improve liquidity to big Wall Street banks, of course, not to you, but to the Wall Street banks, and foreign institutions like central banks, which could help ensure market stability at times of stress. This didn't exist before in this way. They're trying to output this, putting a maximum of $500 billion per day. That's today. How you think, or I should say, when it comes online. They mentioned it in here. I'll mention that in just a second. But essentially, looking at this over the coming, next little while, they may just increase it. Suddenly, there's a huge uptake. Okay, it's $1 trillion now. I mean, we've seen them do this before. The central bank said it would put a so-called standing repo facility in place, effective Thursday. There we go. The Fed said the new tool would take in Treasury, agency debt, and agency mortgage-backed securities from primary dealer firms in exchange for one-day loans of cash at a rate of 0.25%. The Fed said that it would expand access to the standing facility in the future to deposit-taking banks. So right now, there's primary dealers. Who exactly is getting this money? We find out 2 years later. That's what you need to know. Back in 2019, we're almost getting there, by the way. It's like, a month and a half away, where we're going to start to figure out during the big failure, the repo crisis back in 2019, September 17th, I believe it was, or the 16th, when that all started coming down. That right there, it takes 2 years, and we're almost there. So we're going to find out who exactly those primary dealers were. I'm sure it's the JP Morgans and all the big companies that you're used to hearing. But anyway, they're going to expand it as well. The facility targeted at primary dealers will see daily operations, and the one for foreign central banks will operate as needed. The new facility is a backstop for financial markets priced at a level that would discourage active usage. That's what they say. Priced at a level, 0.25%, okay? And so they get into more. I think you get the point. It's a new facility coming online. This is supposed to help out. We'll see what happens. You could see their balance sheet, though. I mean, this is what they're doing. You want to know what the Federal Reserve is up to? They're expanding their balance sheet. Look at the treasuries. Look at the mortgage-backed securities. They're going berserk. They're doing this for a reason that it doesn't make any sense. We want to help the little guy. We want to ensure full employment. So what are we going to do? We're going to buy $40 billion of mortgage-backed securities every month. I don't understand how they still get away with this, how the reporters haven't. I understand the way it works. Trust me, I understand. But like hinting at that at all. Sorry, Mr. Powell, you're saying you're trying to help out the little guy, but you're buying $40 billion in mortgage-backed securities every single month. Do you mind explaining that? Just like something along those lines, but we know how it is, unfortunately. And even the articles, I mean, there's no articles really addressing that. Just talk about it. Just bring it up into the public. No. Powell sees progress on taper conditions though a ways to go. This is what they're expecting. This is what's happening. Like if you watched the press conference, I got upset. I mean, I usually do. I watch them so you don't have to. It's garbage. It really is. FOMC to continue to assess progress in the coming meetings. Fed establishes 2 standing repurchase agreement facilities. So basically what they said, I mean, I think it's pretty obvious. They basically said, the economy is not doing well. The economy is doing well. We are printing money. We are not going to stop printing money. The economy is doing well. The economy is not doing well. You got me? No, neither do I. Okay. Now, this is real investment advice. I think they're fantastic. I really think that people should understand what they say. They're very well balanced. Now, they believe inflation is transitory as well. They acknowledge all of the different prices. They're not like the Fed, I assure you. They think a deflationary cycle is upon us. However, they say we're not married to that. We're not investing based on that. But that's what we believe. Okay? So take a look. What they say is this. The table below shows the categories accounting for more than 2% of the CPI index, while only constituting about 5% of the number of categories. These 10 components account for over 50% of the CPI index and almost 90% of June's increase in CPI. New vehicles, gasoline, used cars and trucks, and so on. So all those things that we've seen in the news. I don't disagree with it at all, but you just look across the board and everything's more expensive. Nothing really comes down. It's not just these things, certainly. Like, if you're trying to use the CPI as a measure of inflation, I think that in itself is a failed policy. To me, that doesn't make sense because the structure itself is long gone. Look at this. Soaring home prices stoke anger against Korea's president. Middle-class voters are venting their frustration, saying government policies have created a class of overnight beggars. Interesting is there's a place where you have, renting is normal. Renting is very normal. Why? Because the regular person, they cannot afford a home. It's just impossible. And so people are upset, which is funny because in Canada, US, it's seen as being fantastic when the prices are going up. It's funny the way it works. I guess it gets to a certain point, and then there's the outrage. And this is just one more example of what's coming, okay? The job situation, you know how important that is. Stockton restaurant hires robot as employee shortage takes its toll. Quote, it is exhausting. This is coming. You can have the chef in the back. It could be Flippy the robot, which people laugh at that, but that's a real thing. I showed it here on the channel before. Flippy the robot, $30,000. It can do the job of 2 people. It could do the fries, deep fried, and the burgers. It can flip them. It could do that. So that's coming. But now you're having the robot that delivers the food to you. So imagine it would know you put your order in through an iPad or on your phone or something. Hit a couple buttons. Flippy the robot makes your fries, makes your burgers, and then Flippy gives it to, I don't know the name of this one here. Maybe it has a name on here. Whatever it is. So ultimately it's going to deliver it to you, your seat. You don't have to deal with a human. I think that's ultimately, whether we like it or not, I think that's probably the future, at least for the lower end places, the kind of the fast food places, and the high end, they're going to still have that service for those who invested in their 7 shares of Amazon. They can, of course, afford that. Or maybe 7 shares of Facebook. Facebook beats earnings expectations, but warns of significant growth slowdown. I noticed a lot of the companies reported very good earnings, but their stock came down after. This is an interesting time that we're seeing right now, but a lot of that was anticipation of what happened with the Federal Reserve. So we'll see throughout the remainder of the week what happens. And this is just something I thought was amazing. Hong Kong's urban farms sprout gardens in the sky. I'll just show you the picture right here, where people on these rooftops, you're in the middle of the city, no green anywhere, and you've got people growing food on the rooftops. Make it happen, people. Do this. This is so important. And guess what? You mitigate the effects of inflation, your food inflation, by growing your own food. That's the message I have for today. If you want the real deal, if you want to join more than 5,000 people strong, going all the way past 10,000, get on the Insiders. The Insiders is my way to get to you directly, you to get to me directly. I will email you the video of the day 5 days a week. So get on there. It's totally free, of course. themoneygps.com. If you haven't already, hit that thumbs up button. Come on, you've got to do so. If you want some funny stuff, some informative stuff, I'm posting every single day, multiple times a day, on Instagram, on Facebook, on Twitter, on LinkedIn, name it, I'm on there. Check it out. I'm telling you, you're going to have some laughs and you're going to be informed as well. Always check me out on any of those platforms at The Money GPS. If you haven't seen this video already, you've got to check it out. Click it and I'll see you there.